Hello from Multi Markets. This is Ahuro with the global economic outlook in the week ahead, which is going to be the 46th week of 2024. We just finished the most important week of 2024. We had U.S. election, Fed meeting, BOE meeting, and NPC the National Committee of the National People Committee, something like that in China. What a, what a big week. We just in the US election, Mr. Trump, President-elect Trump, got more than 300 electoral votes. That was super amazing. While the market, the previous week when we were talking, I was talking about actually based on the polls that we had, I was talking about the challenging election, it's the most closed election that we have, and we were thinking about like, well, probably 50-50, we're going to have the votes, stuff like that. But it was not such a challenging election for Mr. Trump, and they won the election very big. It's not just about the presidential election. We know that the red wave won the election in the presidency, they won the Senate, and most probably the House as well, which means that in the next 2 years, the Republican will have no specific they will not have very serious challenge against when they want to do something, or they want to change some law, bring something new, build up something in the economy, or whatever they want, they can do, because there is no House and a Senate to be able to stay against them. So the Mr. Trump will have, at least for the next 2 years, then will not after 2 years, but for now, at the current time, we know that in the next 2 years, they will have the full power in the US economy and politics to do whatever they want. Later on Thursday, also we had Federal Reserve meeting. We know the Fed meeting, they cut the rate by 25 basis points as it was expected. There is nothing surprise, but the surprise was in the statement. Surprise was in press conference. We know that the Federal Reserve, they were talking about the strong labor market. They were talking about the risk of the inflation, which means they had some sign that most probably, or probably we cannot say most probably we can have holding rate policy in December meeting. We are not now expecting too much to cut the rates in December meeting, as the inflation is getting increasing again. Labor market's really strong, so now holding rate got more than 35% chance, which it was 11% right after the election, but now it's more than 35% chance we have for not cutting the rate in a December meeting. That was something like market accepted that as a hawkish policy, so they somehow looking at this as a hawkish policy, and you're not looking for too much for cutting the rates in December meeting as inflation. Let's talk about inflation for the next week, because while we are watching the next week, I'll tell more about inflation in United Kingdom. Also, the BOE, they cut the rates also by 25 basis points. We know the inflation is lower than 2% in United Kingdom, while economic growth is facing some challenges. So they cut the rates. They cut the rates by 25 basis points. But will they cut further or not? That's the question which we are going to understand, which we are going to learn for the next 2-3 weeks. Because with the new government that we have in United Kingdom, Labour Party got the power after 14 years. They had their first ever budget plan for after 14 years, and this budget plan was very dovish with increasing the taxes, increasing the wages, and too many other stuff that they probably will end with the higher inflation. So this scaring higher inflation, or the fear of higher inflation, also can put the central bank in United Kingdom in more cautious condition, more cautious situation. So let's see what that was what happened last week. But I forget to say, in NPC meeting in China, they gave a little bit more detail about their stimulus that they are going to have. So the market somehow they had a positive reaction for the NPC meeting as well. So they had they put more light on the stimulus plan and other supportive plan that the central bank and the government in China they're gonna have in next quarter. that which was accepted as a positive sign in Chinese stock market, in general in the Chinese market. But you shouldn't forget that the China right now is facing mostly domestic problems than compared to its problems and general overall global problems. But they have mostly domestic problem, and demand in the China is low, and they have to think something about that. Uh, for the week ahead, gonna be a light week, which in United States you will have inflation data on Wednesday and Thursday. On CPI and core CPI is going to be published on Wednesday. We are expecting both CPI and core CPI to increase by 0.2 and 0.3% respectively, which means that the annual CPI can increase to almost 2.5% and annual core CPI with 3% with 0.3% monthly increase can increase to 3.4 or probably 3.5% in annual scale. We have already 3 months. If it happened, we will have already 3 months that the inflation is increasing by 0.3%, which is not a good sign. Later on Thursday, also we will have the producer inflation, which is expected to increase by 0.2%. We know 2 months ago it was negative, last month it was flat, and this month we are expecting to see 0.2% increase in the PPI, which means that the inflation worries and inflation concerns should be taken more seriously. So that was the reason that the market already they're counting with more than 3.35% on not cutting the rates on December meeting. So this is what we had in United Kingdom, what we are going to have in United Kingdom. As you know, as always, also initial jobless claims going to be published on Thursday. In market will be watched that as well. However, the next week, the Fed members and FOMC members gonna have too many speeches, including Mr. Powell's speeches, and these speeches will be very, very, very important to watch. So this on this in United States. In United Kingdom also we will have somehow a little bit important week, because on Tuesday we're gonna have the labor data, average earnings plus generally we're gonna have the labor data. We are expecting to see the average earnings to increase by 0.1% to 3.9%. Unemployment also should be increased to 4.1%. With generally with the new governments and new expectation from the market, while we are expecting to see higher wages, these higher wages can affect a little bit, increasing the wages can affect the labor markets by can have a negative effect on the labor market at least at the beginning, because higher wages with the higher tax it means something that it means negative news for the businesses, and businesses they are not going to be too much happy to hire the new employees. So again in United Kingdom on Thursday or Friday, most probably on Friday, we will have more data from the GDP. We're expecting to see the GDP in Q3 to increase by 0.2%. Generally, GDP, industrial production and manufacturing production data we will have on Thursday from the United Kingdom. We are expecting to see a little bit positive data after 2 or 3 months negative numbers that we had. Out of that, we're going to have very important week on China as well, especially on a Friday. We're going to have the fixed asset investment, industrial production, unemployment rate, and the NBC press conference as well. Generally, the GDP in the fourth quarter, we are going to be positive in China, because when the expectation for the GDP is good, it means that just for the fourth quarter, and I'm not talking about the whole year. It means that we're gonna have more demand because and more sale, because that's the reason when I'm talking, but because we're going to be closer to the 2025 New Year Eve, and it means more demand for more export as we had the last month as well. So the more export means better industrial and manufacturing production we're going to expect for the China. This is the whole story. So that's why the data for the week ahead and next week actually also we're going to expect a little bit more positive data from the China. Also, we shouldn't forget about the effects of NPC and central bank and generally the government stimulus and supportive packages that they had. Out of these mentioned countries in Eurozone, we're going to have the GDP numbers and some inflation data from Germany and some other European members. Generally, going to be a light week with what we were talking about. If you're going to check the charts to see the effect of these news on the chart. As for US dollar index, As I talked, we are waiting for higher inflation numbers. So this higher inflation numbers means higher rates gonna stay for longer, which is going to be a positive news for US dollar. Generally, we are expecting to see the US dollar index about 103.50 around this area for the week ahead. With the higher inflation, higher yields, and stronger US dollar, all these news, they're going to be a negative news for gold. So the gold will be under pressure for the week ahead with the first target as 2,640. If this level will be break, then we're going to see 2,600. And if that one also could be break, we're going to see lower levels. But for now, 2,650 is our first target. As for oil getting closer to the new year, it means more demand for the energy, more production in the factories. Again, it's a positive news. But at the same time, Mr. Trump administration, they promised about the peace. So peace in the Middle East, peace in Russia, Ukraine. So generally, the expectations for the lower, less tensions means less prices for the oil, but in one hand, on the other hand, the positive opposite data means getting closer to the new year is a positive number, positive news for the oil. Generally, that's why we're not expecting to see much lower prices. But at the same time, if the Middle East tensions between Israel and Iran increase rapidly, then mostly probably we're going to have more effect on the oil prices and higher rates. But for now, we are not expecting too much higher or lower prices for the oil, around $70, a little bit higher or lower. On the stock market, higher rates, higher inflation, higher rates for longer, generally more dovish, more hawkish policies, negative news for the stock market. After the first initial reaction to the election and Federal Reserve meeting and generally what we had, but now figure ahead, we're going to be the negative news for the stock markets. We're expecting downside from these levels. As for Bitcoin, the new government's positive energy in the market, we don't have too much data to say that the Bitcoin going to be the negative, but still the positive from the technical point of view, also with the OBV in the shape of getting more investment and RSI 69 knots in overbought area. Still, there are the sign that we can go further from these levels, but at the same time, higher rates can affect a little bit negatively the Bitcoin and generally the cryptocurrency market. But at the end, the whole story is positive about the cryptocurrency in the technical and fundamental point of view. This is what we are expecting for the week ahead. If you had any other question, do not hesitate to write down in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.